Good morning, all. I'm Epstein with your Morning Flash Update. And here we are just after 8:10 a.m. Central Time on this February 16th, 2024. And remember, Monday for the stock market people, you have a closed day. It's President's Day. So we will see what goes on there. But as we take a look at the markets, basically a down market in the Dow and the S&P. The NASDAQ a bit higher, but that has to do with some of the tech stocks giving you a pump and pulling back in the Russell. When we look at the metal markets, the gold is down, silver is up, and copper is getting a nice bump. Now, what did I prep you for and try to teach you? I said as soon as the Chinese come back from vacation, you got to be careful. You're probably going to see some orders come into the market because the lunar holiday, today's their first day back to work. It's just how it works for them. Some people will extend it through the weekend, but this is it. And I said you don't want to sell into the hole on that, and that proved to be pretty good advice. Now, as I take a look at what's going on, and I'll get to the morning data, the dollar up against most currencies, as you could see at this point in time. The grain market is still waffling back and forth. This is the last time you're going to see the marches. I've already made the change in my subscriber video. I did it about a half hour ago. So all of them going forward will be the Mays that we look at in there. Energy markets, a little bit of everywhere. Still big fears as to what's really going to go on in the Mideast. How do you stop what's going with Israel? Will the war with Hezbollah and Israel extend itself further? Just so many questions that we have going there. And of course, OPEC with its rosy outlook for rate cuts and or Chinese growth versus the IEA with more moderation, not seeing that and seeing higher for longer. So let's get to the higher for longer story. We just got the producer price index up 0.3. The market expected up 0.1, 3 times the size of what they looked for. Then we get to the January PPI ex food and energy. So this gives you more your core, up 0.5% versus expected up 0.1, 5 times as much. Personal consumption did go up 0.3, and in December they made a revision. The prior was down 0.1. It's still there. Housing starts today down 14.8%. Wow. And the permits down 1.5%. Now, we're going to get consumer sentiment coming out in about 30, 40 minutes here, and I want to see what that does. But, so, 2 parts of the two-step are both bearish, if you will. What do I mean by that? We had a hotter than normal CPI, and we have a hotter than expected PPI. Are they telling you, oh, there's a new trend, we're through with interest rates? No. To a certain degree, I want to use this very carefully. You get into January, and it is expected you get increases. I'll give you an example. I did not increase my subscriptions. I toyed with the idea. I could have taken up my subscribers 5%, 8%, and been very much in line. I decided not to at this time as I'm holding my cost. I may do it come the summer, but I'm waiting right here. But a lot of people have automatic increases, rent increases kick in, other things kick in at the beginning of a year. You know that. You even get legislation that often just comes in at the beginning of a new year. So the market has to deal with that, and that's a certain amount of what we're seeing. But it's a blip. Any way you want to talk about it, you've kept falling on PPI, CPI, and now you've had a blip in the market. The big question is it more than a blip? Is this the start of an uptrend, or is just where the market hit a rock in the road? And that's what I think it is. It's hit a rock in the road, and we have to look over the next month or two and see moving averages of this. What does it do? It gives a bid certainly to the dollar, and it puts pressure on a host of the different currencies. Is it enough to break the currency sharply lower becomes the bigger question when I look at it all. The bonds and notes, well, you're near the low of the day. You're down 18 points. Remember, the lower this goes, you're getting higher real rates. That's weighing on the market to a degree. So you pay attention to that by all costs, all right? I want you to do that. Now, I want to remind you that we're about to go into my live webinar this Thursday. The invites will go out again today if you're on my mailing list. If you're not on the list or if you've unsubscribed in any manner, you're not going to get it. The way to correct that is come up to the top here. There'll be an icon, fill out the form. You will then get a return email with your user ID and password. And in there, if you have questions on ETF stocks or the like, that's where to ask them. You can ask live questions on futures during the live webinar because I have all those charts. But folks, there are thousands upon thousands of charts on stocks and symbols. I don't know them all. And some of you throw things at me I've never heard of. And you can bring up a chart, but I like to get all the numbers on them. You can call my staff. They can work with you, 866-973-2077. We start this Thursday at 12:15 p.m. I open it up. I close it for new people coming in at 12:30, and then away we go until 20 minutes later. It is not recorded for you to go anywhere and see. You have to attend it. I record it for NFA, which are my regulatory purposes, but we do not put it out on the website because we want you in it. That is the whole idea. I can do a written or a video presentation at any time on a special report. It's your input that makes this fun. And no, if you can't make the time to be there, then I don't think you deserve to see it. You figure it out. 12:15 p.m. Central Time. Move your cursor up here. I'm Ira. I will catch you this afternoon with the weekend review where we look at the weekly charts and see what the bigger picture looks like. Have a great trading day.